My name is Paul Mwai. I'm the CEO of AIB-AXYS Africa, which is one of the leading stockbrokers in the Nairobi Securities Exchange. There are certain advantages of investing in the stock market that are very clear to Kenyans who are looking to invest. The first one, and perhaps one of the most important, is that investing in the stock market gives you dividend payments that you get on a regular basis, either annually or semi-annually. These dividends could be as high as even 10 to 12% for some of the shares when the stock market is low. The second reason is that the stock market provides an investment alternative that has something we refer to in the market as liquidity. Liquidity is the ability to convert that asset into cash at the shortest time possible. So if you invest in the stock market, within a week you will be able to sell and receive your money and get it back. By comparison to investing in a plot, which takes you quite a while to realize your investment, the stock market is quite efficient in as far as being able to recover your money in the event that you invested and you had an emergency. It's quite simple in terms of how you get your money back. And the third reason is if you do it correctly and you do it wisely with the benefit of good advice, you will receive what we call capital gains. So you will buy a share, say at 10 shillings, and you will be able to sell it at 15 shillings. But during that period, you'll also be receiving the regular dividend payments. So those are the incentives for Kenyans who are looking to build up their savings and their investments. They should always consider the stock market as a very efficient tool for providing for their investment. Investing in the stock market is quite simple. So you need to open a central depository account with the Central Depository and Settlement Corporation. And to do this, you would require an ID and a bank account. And these days, we have online platforms that will allow you to key in your details on an online platform, your ID number, your bank account details. And it will be as simple as that, and you would be able to open an account. You can also open an account by filling in a form at your stockbroker's office, and that would also require to be backed up by KYC documents, which is the normal KYC documents, know your customer documents that you would need for opening any account. You would need evidence of your bank account, you would need your ID, and you would need probably a utility bill. I think the key change in the stock market has been technology. If you remember, the stock market started as a coffee shop, a sit down of 5 brokers over coffee, and they would exchange share certificates. Once they agree on the price, when they got from their broker, then it went on to an a board. And now we've seen the stock market being fully automated, which means that the whole process is fully on IT, and you can be able to invest in the stock market without ever having to go into an office of a stockbroker, and you can be able to receive whatever you need. So those are the key things, and we've been able to adapt this by also embracing technology and being ahead of the curve. So diversification is very important because as much as you can say that a company is strong and has paying good dividend, we just sometimes never know what the future holds. Some of the strongest companies always run into headwinds from time to time. Now, the best way to do that is to diversify, so that instead of buying one share, you have quite a number of shares. If one of them runs into headwinds, then the others will support your return. So that's the whole idea about diversification. It enables you to avoid the risk that's specific to any one share that you have invested. Right. I think today the market is quite liberal in terms of information. We have quite a number of stockbrokers who provide research, analysis, and they've hired research analysts who do nothing else but analyze those shares from morning to evening, talk to the management, understand the macro fundamentals. So I would encourage investors to the stock market to tap into the research that's provided by the stockbrokers, read through and see what their recommendations are. We also provide what we call stock recommendation reports, which says this is what we are recommending. At this time, we are recommending this as a buy, this one as a sell. This one maybe you need to hold on and be a little more patient. So regularly you have information flowing, and also on social media you will find a lot more information today on the various companies and how they are doing, which one has the best dividend yield, which one has the best prospects for capital gains.